we'll let you go on that note, unless you want to stay back, because we've got Rajesh, Bhatia, our Group President and CFO at UFlex, joining us. Interesting set of numbers, Neeraj, that UFlex delivered. Very strong EBITDA growth, double-digit top-line growth. Mr. Bhatia, let me actually come to you with regard to my first question. How sustainable are some of these numbers? Double-digit on top line and the EBITDA growth really stood out. Can you hold on to those margins, or are there any one-offs there in your view?
So there's no one-off in these margins, and I think as we go forward, we're quite confident that we'll be able to sustain the EBITDA margins. On the growth for the revenue will come in from our new investments which are getting commissioned, especially our aseptic packaging, where we are increasing the capacity from 7 billion packs a year to 12 billion packs a year, which should come in this quarter itself. So that will set the tone for FY26 and beyond with a higher, production capacity. Even in the current quarter, Q3, that plant we operated at 104% capacity utilization, vis-a-vis 84% in the same period last year. So we've seen a 20% utilization growth on a year-on-year basis in that facility. And any additional capacity that comes our way, I think we'll be able to utilize it much faster. Over the next couple of years, we'll be able to get to 12 billion packs capacity utilization for sure. The next comes from our pack chips resin facility in Egypt, which is already near completion. The mechanical completion of both the plants is now completed, and we are currently, taking activities to commercialization of these. So these two facilities will add on, give us the revenue growth. Plus the revenue growth will also come from some of the facilities which we had set up as on April 24, which are still to utilize their full potential. And our Poland facility, which is currently operating at a lesser capacity utilization, given that Europe still continues to be affected by the lower demand, as well as an increased exports from India, which is sort of keeping that plant utilization levels at less than 70%. So there is a growth potential from that facility. Otherwise, across everything else, we are looking at, we confident that this momentum will continue for sure.
Understood, Mr. Bhatia. I want to also try and understand how customer growth is playing out here, because if you're going from 7 to 12 in terms of capacity, the ramp up is sharp over the next 2 years. What gives you the comfort that pricing will support that kind of growth in volume, and where will that volume growth get supplied to?
So we are very well entrenched in Indian market as well as exports. So from our current facility, we are exporting about 35% of the product, and 65% is being sold locally. So as the requirement for the aseptic packaging is increasing, we've also seen a huge tax cuts coming in the budget, which will all propel the consumption in the years to come. The last time in 23, when we expanded our capacity from 3.5 billion packs to 7 billion packs, we were sold out in the month 1. Even today, if you look at our capacity utilization from our existing facility, which is above 100%, and we know for sure that the kind of orders we are not able to accept both domestic as well as internationally because of our capacity constraints. So that gives us a confidence that, ramping up to 12 billion packs over the 2 years will be sort of a cakewalk. The next capacity expansion for us is going to come at our Egypt plant. So once we've digested this, so that plant is going to have a 12 billion capacity, which is our grand foray in the international markets for this for this business segment. And, we'll start focusing more on supplying that product in Egyptian market, where currently, there is no facility over there, while the consumption is around 5 to 6 billion packs a year. And from there to other markets in Europe, since Egypt has a duty advantage selling to Europe.
Got it. Mr. Bhatia, good afternoon, Neeraj here. I was looking at the presentation that you guys have given in the month of December on the exchanges. And across global and local BOPET films market as well as BOPP films market, your own presentation seems to suggest that capacity and production is much higher than actual consumption. Would this therefore mean that pricing power will not be there? If anything, volume growth will help you clock in growth, not pricing power.
No, if I tell you about Q3, if I see on a year-on-year basis now, the volume growth is 6.3%, but the value growth is 12.8% on a YOY basis.
Okay.
Which clearly shows that other than the top line growth of 12.8%, is 6.3% comes from the volume growth, and the rest comes from the pricing growth.
How is that happening? Because I'm just saying, now an inquisitive me is asking this to you. When I look at your presentation, that production as well as capacity is much higher than consumption. Logically speaking, that shouldn't aid pricing power, right?
No, I'm probably missing your point here.
Okay, let me mention that, sir, and please, because this will be important.
With reference to the Q2, you are saying?
Yes, the December quarter. In the December quarter, you guys came out with the 82-page presentation. On page number 6, it speaks about how the Indian BOPET films market size from 2017 to 2027, as well as Indian BOPP film size, the capacity even in 2027. Will be much higher than the production, and both capacity and production will be much higher than the consumption. Logically speaking, that would mean that pricing power should not be there, right, sir?
So the way it has panned out is that from India over the last 2 years, which was doing about 44,000 tons a quarter exports of the packaging films, the PET packaging film from India, this figure now stands at about 68,000 tons. So while the capacity addition in India has been there's a natural growth in India also of 8 to 10%, but India has done a lot more in terms of, exporting the product from India. So this has happened for PET, this has happened for BOPP as well. So combined, both put together in the last 2 years, if you ask me, there's been a 52% export volume growth of the packaging films from India, which is given the much better pricing power to the domestic producers in the country.
Okay, in which case, my final question to you, Mr. Bhatia, would be that when I again look at your presentation and I wonder if the things have changed. You cited how from 2020 to 2024, you guys have delivered a 16% revenue CAGR and a 10% EBITDA CAGR, if I'm not wrong. Are those the kind of numbers that you believe can continue? And if so, for what period of time? Or would you better those?
So I'll split this into 2 periods. One is the normal period and other is the COVID period, especially the FY 2021 and 2022, where the raw material prices were 70% higher than what they were today. And they were demand supply, they were the supply chain issues which led to, the extra margins for all the, packaging film players. So if you leave out that particular period on an overall basis, if we are looking at between 14 to 15% of the EBITDA margin across the various segments of a business, I think that's the normalized EBITDA one should look at and plan. And your growth will come from the new capacities that you will add, the new dimensions in the business like you will add. And one such huge dimension that is coming in the way is now recycling, with the support from the legislation in India, where from 1st of April now, in the rigid packaging, there needs to be 30% recycled content, and in the flexible packaging, on an overall basis, there has to be a 10% recycled content which has to be used. So what happens with this is that, all the brands are looking for the recycled finished products. And so that in the next few years, when these ramp up from 30% to 60% and from 10% to 60% gets implemented, you will set up the recycling facilities, which will give you the demand and the top lines, as well as the extra margins, because as a newcomer, we've been master of this recycling and all that. We've been doing that since 90s, and we've mastered the art of as to how the recycling is to be done, and the input output norms and all that, and the quality parameters. So I think the momentum is now going to come from there in the next.
Okay. Mr. Bhatia, we look forward to talking to you post the FY25 annual numbers as well, just to get a sense of what the year ahead might look like, in case you give some guidance, etc. But congratulations on what seems to be a very strong quarter, and all the best for the outlook ahead.
Thank you. Thanks a lot.
That's a confident UFlex, by the way. And by the way, UFlex and Polyplex, both of them came out with decent numbers. It's cooled off from the highs of the day, but still up 3.32%. I wonder if Polyplex is also up in the green. Just pull that stock up. No, not really. Flattish completely. Amar,